Ladies and gentlemen, good day to you anywhere you're listening. I am Yemi Olaleye. I welcome you to another wonderful edition of this weekly outlook for the market. So, on our market outlook for this week, we'll be checking out from the fundamental. We move straight from there to the technicals. On the fundamental outlook on forexfactory.com, I'll filter to see only the high impact news, which is the red folder. And on Monday, there is none, which means there may be a little bit of slow movement in the market for Monday coming up this week, 25th to 29th of November 2024. On Tuesday, we have US dollar coming up with the CB consumer confidence, and that is 4 p.m. Nigerian time. On Wednesday, we have the 1:30 a.m. and 2 o'clock in the morning, AUD and NZD coming up with CPI and official cash rates respectively. 3 a.m. Nigerian time, NZD continues with the RBNZ press conference. And also 2:30 p.m. Nigerian time on Wednesday, we have that of unemployment claims by the US dollar. So these are important outlook for the week. We should be looking forward to see how this is going to move in the markets. Tuesday, Wednesday is likely going to be volatile in the market. On Thursday, likely this may be a very slow day at the office because this is the Thanksgiving day and this is a bank holiday for US dollar. Okay, so there may not be really much volatility in the market, and of course, unexpectedly, it may really be volatile. But usually, it used to be a slow day at the office, and we can be careful. On Friday, 29th of November, 2:30 p.m. Nigerian time, Canadian dollar has a news on GDP, which is released monthly after monthly. And these are the outlook on the fundamentals that we can look forward to see in the course of this week. From there straight, we go to the technicals, starting from the DXY. What is the outlook for this week so far? Over the month of November, we've seen how the market has been bullish on the XY, and this has made it the second month of bullish in the market. And in all of that, we can clearly see that this has shown a quality level of range in this market at the same time. But then we've said ahead of time that we're expecting this bullish momentum on DXY, which has happened. So in our last outlook, I remember we're anticipating that the DXY is going to close above this high to grab liquidity. That has happened now. So what is the next thing? Is it coming down, or is this going to continue in the upward direction? Let's check the lower time frame, which is the weekly, to get insights on the further action and expectation on DXY. Now, for the past 2 months, this has actually been on a bullish ride in the market. 1, 2, 3, 4, 5, 6, 7, 8. For the past 8 weeks, which is 2 months, the market has actually been bullish on DXY. We've seen the structure. After this low was taken out, we had that bullish movement. Now, after this level is taken out, what should we be expecting? More of a bearish movement. And ideally, as it is, when we look at the weekly time frame carefully, you're going to see that we have an imbalanced price level here, which is at this price level on the DXY. This is also a very important place. We should be expecting a reversal on DXY to go bearish for this week. And you're seeing the price of the market has already tapped into that zone for the Friday, which was on Friday, the last trading day of last week. And that aside, when we look at this is just one reason we should be expecting a bearish movement. Secondly, the high that we are anticipating that should be taken out, this is a liquidity sweep. So we expect this to just be a sweep, and the market should retrace below it and move close below it before we expect more bullish movement. That is 2. And thirdly, we have another reason why we should be expecting a sell on this price level on the XY, because this is also a bullish imbalance right there, and we can be expecting this to happen for the market to come back into this price range before we see further bullish ride in that market. So we have 1 or 3 reasons why we expect DXY to go bearish before we go bullish again. But currently, it remains a very strong bullish. But then this is a fantastic and impulsive bullish momentum, which expects a quality retracement before we expect more bullish ride. So I'm not going to jump on the bullish ride as it is. I'm going to expect more bearish momentum into those liquidity price levels before I push forward. And on the daily, therefore, the outlook is the same on the daily. Can you see here? The outlook is the same on the daily. So I'll be expecting for the market to come back into this price range before I take a buy opportunity. And there, let me show something else on the daily as well. Exactly, that's it. On the daily as well, we expect that bearish movement before the bullish. And let's check the 4-hour time frame. If you look at the 4-hour time frame, look at the pattern the market has been creating. This is a powerful shooting star after it tapped into the weekly order imbalance level, and there it has formed series of candlesticks showing lower lows and lower highs. In fact, it closed with a bearish candlestick, which suggests more bearish momentum in this market. So ideally, I would be waiting sincerely for a continuation of sell into this price level to take out this low right here, take it out completely, tap into this level before I see more buy. So this would be my outlook on the 4-hour time frame for DXY. And of course, if you go to the daily time frame or the weekly time frame, this will be my outlook. I'm going to expect the market to do something like this. I'm coming. This is taking time. Okay, so I will be expecting the market to actually return from here down to this zone. So basically, this is the outlook on the DXY. So let's go into a price level, another currency pair per se, where we can have more exciting opportunity in the market for this week. So don't forget, we're trading with what we see in the market and not what we think. All right, it's not by what we feel, it's by what we see in the market. Extensive bullish momentum, retracement, extensive retracement, extensive retracement, extensive. We should be expecting retracement based on what? Based on the weekly time frame liquidity zone above here. All right. So let's go to the Euro US dollar. We do not have much time. Just see what the market is about to do, and we move on very quickly. So on the monthly time frame for the Euro US dollar, we can see clearly as it was 2 weeks ago, I was anticipating that this will be taken out. This low is expected to be taken out. All right, and you see already on Friday, the market already took out this low. So this remains a solid bearish momentum in the market on the monthly time frame for Euro US dollar. Coming to the weekly, what has happened right there is that the market has taken out this little low price level, and when that happened at our what price level? At 1.0414, we expect the market to do a bit of retracement before we have more continuation for a sell. So how will that happen? What is actually the expectation? So I'm going to take out this low. So what am I expecting right there? So look at this. On this weekly outlook, I'm seeing a potential bullish ride, whereby the market will get to a price level to grab a liquidity for more bearish ride, which is at this price level and at the threshold of 1.0642. I'll be expecting that to happen, whereby I will ensure that I wait for the market to come into this price zone and move down again. You see the whole of this price level here is expected to be taken out in the market as well. So it will only take time, but this is the anticipation. This is what we see in the market, and this is what we're dealing with. All right. Look at that. So from where I'm expecting the buy to get to, it will take the market about 500 pips to get there later on. And don't forget, like 2 months ago, when we were anticipating the market to start selling from here, it was actually a day like this, and the market has done over 875 pips from that price range. So which means there is nothing that this market cannot actually deliver. It may only take time. So I'm expecting the market to buy into this price range of 1.0647 threshold on this bearish imbalance price level before I'm going to sell off Euro US dollar. And currently it remains bearish, but a bullish ride is expected as we speak before we can join a bearish. Going to the daily time frame, let's see what we have in there. On the daily, the anticipation is the same, just that we may have a refined entry point whereby we have something like this on the daily. So on daily, we have a bearish imbalance too, right there. If you see what the chart is saying. So we can expect a bullish ride from where the market is now to a price level like this, and we can now see a sell-off from there. So which means we may expect the market to buy as much as 90 pips on average before it will start selling. And this sell is expected to deliver as much as over 200 pips in the nearest days. So this is the outlook for the week on Euro US dollar. And let's further go to the daily time frame or the 4-hour time frame. You see, for the daily, for the 4 hours, from the weekly, all we have in common is we expect a bullish momentum before we have this bearish momentum on Euro US dollar. So on the 4-hour time frame, look at the outlook very carefully. So I can take out these guys, I can take out this marking so it doesn't distract you. So look at this. As it is now, would be expecting the market to get back. This is a support level that has been broken, and of course, it has been retested powerfully with a candlestick facilitated by fundamental outlook on Friday or Thursday, right? And with that outlook, therefore, we can be expecting, after seeing this rejection right here, we can be expecting the market to continue. Look at what the market has printed here, series of rejection. We can be expecting the market to go back into a price range like this before we now see sell opportunity. So I will not be in a rush to sell off EURUSD right now. I will wait to see the bullish momentum. I will wait for it to get into a sell side zone, and I will be waiting for the liquidity to be grabbed and further of confirmation for a sell continuation in this market. So this is the outlook on Euro US dollar for this week. Let's check out what we have on Great Britain pounds USD, starting from the monthly time frame, and let's see what happened there. Oh, come on, look at this. Look at this. This was when I was analyzing this, expecting it to sell from here, from this price level. Market got there. That was 2 months ago. Look at it now. That's close to 940 pips. All right, that's average of 900 pips, which I was expecting this price level to also be taken out in the market, this same price level here. But leaving on that side now, let's go straight to today's business and let's see the opportunity we had on Great Britain pounds for this week. It's also a bearish momentum on Great Britain pounds US dollar, and ideally I would be expecting this level to be taken out in the market, which is about how many pips to the current market price? 232 pips, 7 pips. And then I expect this to be a basic bearish momentum for monthly time frame. But then let's go to the weekly. Let's see what opportunity we have. And for the past number of weeks now, 1, 2, 3, 4, 5, 6, close to 2 weeks there, about 2 months there, about, which is about 8 weeks ago, this market has been selling and continuously selling. Why? Because there is an expectation on DXY, which was playing true according to what we analyzed, and we've been seeing this consistent selling. So what are we expecting now? The market has gotten to a price level we should be anticipating for a buy. Why? There is a price level here. Before this high was taken out in the market, look at this. Before this high was taken out in the market, we had a series of movements to the lower price level where liquidity was grabbed right there. Also playing parts of where liquidity was found before this bullish momentum continued, broke the structure, and now market retraced, and all of this has played out. Market is coming down, falling knife, of course, where to a particular price level exactly. So where is the price level? So another block range where we can anticipate the market to get into this range before it tap out or it tap in for a buy movement. And of course, this may also get to the threshold like this before we're going to experience this buy and then see this sell. Can you see that? So which means we may have a direct buy from where it is currently, depending on the DXY reaction, or we may still have more of about 150 pips on average into this range on the weekly time frame before the EURUSD will tap in for a buy and then move straight back to the imbalance of this bearish imbalance movement that's been created at about 1.2840 to 1.2715, and at the threshold of 1.2784 is where I would be expecting Great Britain pounds US dollar to buy to before I take an opportunity in this buy momentum. So ideally, what this means to me is I'm going to wait for the bullish ride and get to this price level before I start selling again, or otherwise I'll be taking part in the short-term buy, which means I have to go to a lower time frame before I found that opportunity. And let's see it where that is. Look at this. Look at this outlook here. Look at this. This is on the daily time frame. And can you see what the market is creating? Market has created higher highs and created a level like this, broke the structure, went back there, retraced, and all of that, and market has moved there. But what our focus is on right now is we want to see more confirmation for a buy. We've seen why we should be buying from this range, but we need more confirmation. And let's check that on the 4-hour time frame. On 4-hour time frame, we've seen rejection. Our market has gotten there with a massive bearish candle, followed by a bullish candlestick, which is more or less like a doji, followed by higher highs and higher low candlestick formation. So the three last bullish candlesticks that formed for the last 12 hours of Friday last week has actually formed higher highs and higher lows formation in the market. And then this is just a signal for more bullish confirmation. So we're going to wait for the market to open in for this week, and the market opening for this week will determine how well we should be anticipating this buy. But do not let us deceive ourselves. This still looks very bearish, but then we know the market is definitely going to go into a bullish direction before we catch more sell opportunity. So that is where my stand is on Great Britain pounds, US dollars. And let's check out what we have on AUDUSD on the monthly time frame. Let's see the analysis we had. This is also an opportunity for us to see a bearish momentum right here. We've seen a bearish momentum for the last month, and for the month of November, of course, we're seeing a bearish momentum. Although AUD US dollar is not as clear as the Great Britain pounds USD and EURUSD, but on monthly this remains a bearish momentum to this price range. And on weekly time frame outlook, let's see what we had for the past 8 weeks. Of course, this has also 1, 2, 3, 4. Okay, for the past 8 weeks, this has also been in the bearish direction in the market. And what we expected is for this loss to be taken out and the market to get to this price level, which is about 225 pips to the current market price. So what I would be expecting here is to see more bearish momentum, but then this is not a clear signal either for a buy or for a sell. But ideally, there's no inefficiency in this market paradigm in what has formed here, especially after this rejection has taken out here. Okay, has taken place here rather. It has wiped out the price level here. Liquidity has been grabbed. It has moved and do all of those things. But then let's see what we have on the lower time frame. If this can give us many opportunity into the price level. Okay, look at this right here. So this is the only thing I can see from this market. I can expect the market to come to this price range like this to see a buy movement. What do I mean? I can expect it to go into this price range before I can see a movement, because there was an imbalance that was left there, and that is also about discounted about a premium price level or equilibrium price level for this impulsive movement into the downside. So which means we're going to wait for a sell movement on AUD US dollar at 0.65528. That is also a very good point we can look out for. And of course, this is not showing a clear direction of buy or sell, but what the market is showing right here is still have an opportunity for day trading. Okay, let's see what we have on the 4-hour time frame. And if this information remains the same, then it would be a very good one for us to take advantage. On the 4-hour time frame, we can actually expect the market to get to this price level right here before we sell off. We can expect the market to get to this price level, or we can expect the price to get to this price level here. Okay, we can expect the price to get to this price level here before we actually sell off. So this is not really much of a pip to move in the market. This is just about how many pips? 10, 15 pips and 20, 26 pips at max. So this is not really ideal. I'll wait for the extreme. Anyways, I'm going to wait for the extreme before I pull out a sell opportunity on AUD US dollar. And let's see USDCAD. Let's see what we have in there. USDCAD has been a very bullish boy for the past 2 months. We analyzed this together some time ago. If you check the series that we've dropped, so their analysis with monthly weekly outlook that we've had before now, like for the past 2 months, for the 8 weeks, you can check them on the channel. You can check them on this channel and see what we've said about all of these currency pairs. And you can come back and check your chart and see how they've been playing out. It's quite an amazing year so far, so good. For the past 6 months, the analysis has actually been helpful. So we're looking for the opportunities we can get in the market, and not we struggling with what the market is about to give us. Okay, so we're trading with probability mindset, and it makes us a better trader. All right. So on the monthly time frame, we've seen how this high has been taken out on USDCAD right here. This was also expected in our previous outlook. right? We expected this level to be taken out, and this level has already been taken out. And after the liquidity was swept, the market retraced just below that same high level. What does that mean? Let's check it out on the weekly time frame and see the opportunity we have on the USDCAD. So right here, we see that the bullish ride above the level of that liquidity that was the high we were expecting was the same with the bearish, which was cancelled right there. So what does that mean with the candlestick calculation pattern? It means that it's almost like nothing happened above this price level. So does that mean this market would actually be retracing before we expect more bullish direction? Yes, that would be my guess, of course, because that is what the market is actually showing in this time being. So what am I expecting actually is to see the market gets back into this price range like this, and which is about how many pips? This is about 300 pips on average into this price range before we have that bullish momentum again. And we expect more of this sell into this price range before we have that bullish momentum. This is on weekly outlook. This is on weekly outlook, and it is very, very possible too that we may just expect more sell into a price range that we not get here before we have a buy opportunity. Where would that be? Let's check it out on the daily time frame. There must be a price level we can anticipate that. Okay, taking out the previous high that we saw, can you see the nice W pattern that created this swing movement? Okay, and after then, what has happened in the market is series of highs and lows and all of that. Okay, so this was the low, this was the bearish candlesticks that canceled almost the entire bullish candlestick above the previous high. The liquidity was grabbed. Some of the liquidity was grabbed here. The market will return it most likely. So what are we expecting here is to see how the markets will take out this previous low price range before we have more bullish momentum in this market. So where would that be, if at all, if we are waiting for the market? Definitely we can wait for markets to come to a price range like this. We can wait for the market to come to a price range like this, and the average of this is about 75 to 78 pips movement. So at the opening of the market, if we see something like this and it's showing a clear bullish momentum in this range, then we can be looking forward to buy from there. This is USDCAD on the daily time frame, and let's see what we have on the 4-hour time frame. And let's see what that offers. On the 4-hour time frame is the same. That agrees with what we've seen on the daily time frame. On 4 hours, we have a bit of choppy markets right there. Even though the market is even buying and selling at the same time, but more of ranging market within this zone, within this price zone right here. Okay, so what we're expecting now is to see more bearish momentum in this market. So into this price range, that is when we'll be buying from on USD CAD. Okay, let's see what we have on the gold. This will be the last that we'll be checking out today. On gold. Oh, come on, gold. Let's start from the monthly time frame. From the monthly time frame, this guy has been a very bullish, or it has been a very bullish momentum, and I think I've been on that bias for some months now. And when you look at this, over 1,800 pips has been retraced for this month of November, and that is actually where I was anticipating at a point in time. I think in the beginning of this month, if you check the video, I was saying an imbalanced price level here, which I said I'm expecting gold to do a bit of retracement, but I wasn't sure if the market will actually wipe out the entire liquidity zone right here before it continues with a buy. And of course, that's what gold did in this month. It took out almost more than 95% of the bullish imbalance that was left for the month of August, September, and October, and gold has actually wiped more than 95% of that. And of course, we've seen how the market has retraced over 1,800 pips currently for this month, and this suggests to us that this remains a bullish momentum in the market. And let's see what we have on the weekly time frame. Let's go. So taking out this, I just want to remove this mark. I want to take out this mark. I want to take out this mark, or I can leave them, of course, because these are things we've said before now. So on the weekly outlook for last week, we're expecting that gold was going to actually go bullish or bearish based on the reaction we saw on the DXY. So the outlook was to see movement in the market, and last week was a complete bullish Marubozu candlestick formation pattern for gold on the weekly outlook. Come on, guys. And that's also suggests to us that this must have beaten more than 70% traders' expectation into a bearish ride to reach this price level before it will buy. And let's see the opportunity we had here on the daily to make it much more easier. On the daily time frame, we saw Monday, Tuesday, Wednesday, Thursday, Friday was actually a bullish run on gold without an opportunity for even a reasonable bearish retracement for the continuation of this buy. And that means a lot of traders must have been shocked in this buy when they took a sell market. And ideally, this has left us with many imbalances level in the bullish ride. But then what really matters now is when we're on the weekly outlook, do we have an opportunity to see if there is a fair value gap at any point in time in the market? Yes, of course, there was. What the market has done there was also a fair value gap. Okay, so let's see the imbalance that market created here. Look at this carefully. From this price range to this price range here. Right, from this price range to this price range here. So we'd be expecting the half of that, which is the threshold of 2706.73, and the market has actually gone in there. And currently for the last week candle, it was actually sitting and currently sitting in that imbalance zone, which means we are expecting more bearish momentum from this price range. It is that simple. So let's go to the lower time frame. Let's go to the daily to add more flavor to this. So on the daily, therefore, we can be expecting the market to come back to a price range like this before we have a more bullish momentum. This is actually a bullish ride, but I'm not going to jump on a buy market on the gold for now because I'm expecting a bearish movement before I'm going to take a buy. So the market must come back to a discounted price level before I take a buy. Currently, it's too risky for me to buy. Look at a straight buy, and of course, it's not the best idea for me to jump on a buy for this week right here. I have to wait for the market to come to a price level that I understand more where the liquidity may just happen. So where will I be expecting? This price range on the 4-hour time frame is where I'll be anticipating gold to get to before I'll be taking a buy opportunity on gold for this week. All right, ladies and gentlemen, don't forget to do proper risk management and ensure you have a very good psychology. Keep your discipline and you become a better trader. Thank you very much for watching. Click subscribe, and next week we meet again. And in course of the week, of course, if we have opportunities on the intraday market, we're going to analyze that and we're going to share with you. Thank you very much and do enjoy the rest of the day. Bye for now.